Good morning, hello and welcome to Trading Hour. It is 11 a.m. and the bulls have finally managed to prevail with a fair amount of green on the screen, at least on the large cap side of the market. Mid caps, there is still a little bit of red out there, but it seems that after many days, maybe the FPI selling is finally getting exhausted, and therefore we are seeing these big moves. I'm Surabhi Upadhyay. With me on the show is Vivek Iyer. Vivek, so, the bulls will hope that at least for a change one day today, they can manage to,
Well, it's the start of a new series. It's the start of the January series. So hopefully today we can end the first day or day one of the Jan series on a positive note. The worrying sign in the market is the fact that the broader end of the markets, both the mid-cap and the small-cap space, are something that are seeing some red. So both of them now trading near the day's lowest point. A couple of stocks on the radar, a quick check. First up, have a look at Dixon Technologies. Some positive news flow coming in. The stock rallied almost 2%, at the start of the session, but now given up the gains completely, down almost 1.7%. The other set of stocks that are holding out Surabhi today is actually the auto pack. Very interesting report from DAM Capital. They're seeing quite a lot of value in the entire sector. And names like Tata Motors, Escorts, Bajaj Auto, some of the names that have actually upgraded, all of them doing quite well. And even some of the other stocks are seeing some follow-up buying today or some sentimental rub-off positive effect. And the entire pack today is doing quite well.
And DAM Capital itself is doing quite well, right?
It's just listed.
Now, life as a listed capital market entity, which brings me actually to today's listings before we move on, because the first management on the show is actually one of the listings. Let's talk about the Panch Ka Punch, as I'm calling it. DAM Capital is up about 53-54%. Transray Lighting is still up about 32-33%. Mamta Machinery has been the toast of the morning, really, a gain of 160% on the pop. That's DAM. There is Santhanam Textiles, 22%, and there is Concord Enviro, which is also holding up with a gain of about 15 to 16%, at least as of now. Speaking of Concord, let's take it away, Vivek, because it's a very interesting company and it's an interesting space of wastewater management, water treatment. It's a part of the market that people have always wanted to hear more on and get more sort of listed players into it. So we finally have one such player making its way to the public market.
Player, very interesting company. Before we go to the management, quick context. Very much in the similar space as a Vatek Wabag or an Iron Exchange. But this particular company, smaller in size and scale, and they don't do too much work with government agencies, largely catering to the private space. But it'll be interesting to get the management on air and get their thoughts into what exactly is it that they're doing and what is it that the outlook holds as far as FY25 and FY26 is concerned. A good debut on the exchanges as they listed at an 18% premium to their issue price. Prayas Goel, the chairman and managing director, along with Prerak Goel, executive director of Concord Enviro, join us now. Good morning, gentlemen. First of all, congratulations. It's a stellar listing. Prayas, let me first come across to you. Congratulations. You're now part of the listed universe. A lot more responsibilities for you now. Give us a sense, number one, what is it that investors can hope as far as FY25 is concerned? Where will you end the year in terms of top line, EBITDA and PAT? And FY26, what is it that you're guiding the street to?
Hi, good morning. Thank you for having us on your show. And I'd like to just start by thanking all our investors for the fantastic response and putting your faith and trust in us. So yes, we are in the space of industrial wastewater reuse and zero liquid discharge, not anything to do with the municipal space in wastewater reuse. We're a global company. To answer your question, we have a very strong order book as of start of this financial year. We are about a 500 crore order book. So with that order book and the tailwinds that we're seeing across from sustainability to water security, we're well poised for a strong growth going forward.
Okay. Prayas and Prerak, congratulations to both of you and to the entire team. By the way, those are wonderful, beautiful names that the two of you really have. Very inspiring, I must say. So let's actually get down to some more brass tacks and try and understand, more of the details. You said that the order book is about 500 crores right now, and it's, as Vivek also pointed out, you don't do much work with government agencies. So who are some of the big customers? What are the kind of, margins that you typically operate on? Tell us a bit more about the scope and how you see your order book growing in the next fiscal FY26.
Yeah, so we are into, in terms of sectors, food and beverage, including the Alcobev segment is one of our largest sectors in the last couple of years. We work across pharma, chemical, automobile, steel, and most of our customers are kind of blue chip companies or leaders in their space. About 40% of our sales come from outside of India as well. In terms of the, as I mentioned, the order book number, and then we're seeing a very strong kind of intake coming in both from our global business and as well as on the domestic side, as you know, the whole space around sustainability and water gets more and more traction.
Understood that. Prerak, let's bring you into this particular conversation. One thing which we want to understand is a lot of work going on, especially, from government agencies, both in India as well as abroad, in terms of actually ensuring that there is a lot of wastewater management. Number one, so the first question is, why don't you all do too much work with government agencies, given the kind of growth that some of the other listed entities and other unlisted entities too are seeing over there? And number two, as a percentage of your order book as well as upcoming orders, what is it that comes in from the domestic market and what is it that is coming in from export markets? Mainly, I believe you have strong presence in US.
Yeah, that's right. So let me answer the first part of your question. So if you look at our technology, we are a completely technology-driven company, and from day one, since inception, membranes have been kind of the base technology on which we've developed ourselves. So automatically, reuse of water, or wastewater, is what we focus on. Now, as you're aware, the government is mainly focused on treatment and discharge of water, and they mainly focus on the sewage side. So in the treatment, the core technology that we operate in is not exactly a match. When the government starts looking at reuse, that will give us the opportunity to kind of start looking at more solutions for the government. It's starting up today. I wouldn't say that the government is not doing reuse. There's a lot of sewage treatment and reuse that is starting to take place. So we're definitely tracking that market and looking for the right projects to enter. On the the global side, the business that we're doing with some large corporates is quite significant. We have leaders in the alcohol beverage sector. We have leaders in the aluminum cans manufacturing sector who we are working with, aerospace. So about 40%, as Prayas said, about 40% of our business is done overseas. At the current moment, almost about 35% of the order book that we have is with the international market, mainly focused on US and Mexico. That's the key markets where we're seeing, due to change in regulations, a lot more opportunities coming up.
That's interesting. But just to go back to Vivek's question, Prerak, why the aversion to any sort of government orders, whether it's central government, state government, local municipalities? Because the central government's been spending a lot of money. I mean, flagship big projects like Namami Gange, so on and so forth, river linkages, river water purification.
Right.
In the future, would you look at it? And if not, why not?
Right. No, I think, as I said, see, the moment the government starts to increase the reuse of water, if you even look at the Namami Gange, they're mainly looking at water treatment and discharge to the river bodies, right? It's not about putting it for reuse. And a lot of our solutions are coming from technology which is being implemented to reuse wastewater. So at the moment the government starts shifting towards reuse, and that's the sort of projects that are happening, that would be something that we would love to enter and participate in, whether at the central government or at the state government levels. Okay,
got it. Gentlemen, just hold your thoughts for a second. We're getting some more visuals as dignitaries cutting across, public and private sector. Of course, the political lines as well are paying their homage and their tributes to our former Prime Minister, Dr. Manmohan Singh. That was Mr. Rahul Gandhi and Priyanka Gandhi, both of them arriving at the residence over there. But back to some of the details and, what we can expect from here on. So, Prayas, to go back to the proceeds of the issue, a large part of it was OFS. Promoters have also sold some of their stake. And I think about 75 odd crores has gone into the company, part of it to pay back debt. So a quick question. First of all, as promoters, what is the intent of the family? Where do you see yourself maintaining your holding? Can you just tell us where it is now, and will it not go below that mark?
Yes, so we are, the promoter holding is about 51%, and, we intend to kind of maintain the promoter holding at that level there for sure going forward. And as part of the kind of use of proceeds from the 175 crores of raise that the company has had, about 50 crores will be utilized towards debt repayment. So that should automatically kind of help the EBITDA to PAT bridge going forward as well. We have about 33 odd crores lined up for capex, about 23 crores as investment in technologies. new technology acquisitions, and about 10 crores as an investment in our pay-per-use business. And the balance, of course, will be issue expenses and general GPC funding.
Just a balance sheet update. After IPO and after the money coming in, and once you prepay some of this debt, how much debt are you left with on the books and how much cash?
So we'll be at about 100 crores of debt post that. I think cash should be still quite comfortable, about 130, 140 crores.
Okay, and what was the percentage of finance costs that you're paying, or how will it come down to? So subsequently, FY26 onwards, we should expect to see that interest cost getting reflected onto the onto the P&L statement, right?
Yeah, absolutely. So I think, we had some term loan debt and some working capital debt in our overseas subsidiaries, which is what we are repaying. The Indian debt is quite competitive at about 9.5%. So yeah, with interest rates kind of softening in the long run, we expect that to be averaging about 9.
Okay, all right, Prayas and Prerak, good luck with your plans going forward, and look forward to more interactions now that you are part of the listed market ecosphere. Well, back to some of those really somber visuals. A man who has had such an invaluable contribution to the Indian economy, to shaping the India that we live in today, with countless innumerable new flagship programs and schemes and landmark reforms. We've been talking about it since morning, whether it was liberalization, whether it was ending of the license raj, or of course dealing with the balance of payment crisis back in '91. Dr. Manmohan Singh, fondly remembered by the nation. We'll take a break on that note, come back on the other side, and we will talk about some of the cues from the commodity markets.
Welcome back to Trading Hour. Well, let's now shift our focus to the commodity space. Manisha joins in, and today we are focusing on edible oil prices.
Oh, well, yes, Vivek, it's not just that you're paying higher money for coffee and cocoa, but the edible oil clearly has been taking a lot of money out of your pocket as well. It's been a mixed bag, yes, and we've seen the soybean prices decline quite sharply, but down by 24% in this year. But every other oil actually has seen gain in this year. So whether it has been about sunflower oil, which has been up 53%, rapeseed and palm oil also have gained up between 20 to 25% in this year. Well, there have been production concerns, adverse weather in various producing areas as well, and then it has been about climate change that has led to lower yields in many producing countries. Geopolitics has played its part as well, because sunflower majorly comes in from around Ukraine and Russia, where we have seen freight concerns and higher logistic costs as well. The markets have seen stronger demand. The Chinese imports were on the higher side as well, and India also imported quite strongly in the previous quarter of this year. The biofuel mandates, especially when you look at Indonesia, they're already approaching B40 now, blending in sense of 40. So that also takes a lot of palm oil in accordance there. That is what has been keeping the prices on the higher side. The only edible oil, as I said, has seen a decline has been soybean, because we're looking at high production in the Indian markets, and the US markets is in a glut. So the global markets are looking at very high inventories. And for the Indian markets, it also has been about concerns of meals export. It hasn't been viable or feasible. Industry has been asking for incentives to export meal. If that doesn't happen, then perhaps this is going to be one edible oil where you could see prices continue to decline into 2025 as well, while the other overall sector could see further gains.
Okay, all right, got it, Manisha. Thank you very much for the update over there. We do have to take another quick break. But in the meantime, the Growth Code, an initiative by Grow and CNBC-TV18, is designed to provide you with insights and strategies to navigate the market and make informed trading decisions. Today, we will demystify how traders can prepare for Black Swan events.
The market is a game of delicate balance. Traders have to build positions, manage risks, and always strive for a steady upward trajectory. But sometimes a sudden unexpected disruption can overturn the whole game. Such events are called black swans.
So there's a book by Nassim Taleb in which he says that by the outset you cannot predict that a black swan is going to come. In fact, they say that there are 12 recession outcomes every year, but hardly any materialize.
It takes only one shock to show how devastating a black swan event can be. In 2008, we got a stark example of this. The subprime crisis came seemingly out of nowhere. From mid-January 2008 to mid-September 2008, Nifty lost 35% of value. Lehman Brothers filed for bankruptcy on September 15, 2008, and Nifty lost another 25% in the next 3 months to 3,000 level by the year end. Investors lost fortunes, and retail investors faced the hard brunt as the Indian markets lost 50% of market capitalization in a single year. The 2020 COVID-19 pandemic presented another black swan event. On 28 February, Sensex crashed 1,194 points in early trade. But this time, Indian traders were better prepared.
So traders were able to manage the 2020 COVID crash. Traders were aware that you need to manage your overnight risk, but I made a rule that no matter if I'm carrying any overnight trade, I'll hedge the trade. So if I had naked futures, I would have lost 3.5 lakhs on a single lot. But due to my hedge, my loss on this trade was only 20,000.
The lesson? Black swan events can't be predicted, but with planning, you can cap your losses.
So one key lesson which I have learned is no matter how sure you are about the markets, every trade should be hedged overnight. And in case of any major correction, you should not lose more than 5%. And the way to do that is, suppose you are long in any instrument, you buy a protective put, which means you're buying a put certain percentage away from the current market price, so that even in case of any correction, your losses are capped and you're not losing more than 5% of your trading capital.
So the market may throw curveballs, but with the right risk management, you can endure these unforeseeable events.
Welcome back. Well, you're with us on Trading Hour, and tributes have been pouring in as we continue our special coverage of remembering former Prime Minister Dr. Manmohan Singh. Our colleague Parikshit Luthra has been joining in as well. He's been in a conversation with former Finance Minister P. Chidambaram. Parikshit, over to you.
Yes, it's indeed a very sad day. The nation has lost Manmohan Singh, one of our most visionary Prime Ministers, somebody who was responsible for very important economic reforms through India's history. Joining us right now is former Finance Minister P. Chidambaram. Mr. Chidambaram, you're someone who's worked very closely with Mr. Manmohan Singh. What aspect of his life, his contribution, really stood out for you?
Dr. Manmohan Singh was clearly making a clean break from the past, from the path of socialism, state control, regulations, import control, export control, foreign exchange control. It was not an easy decision. He must have believed in it deeply and for a long time. When he got the opportunity, he did not flinch. He just went ahead and did what he thought was right according to the laws of economics. Of course, he was greatly supported by Mr. Narasimha Rao. But the courage that Dr. Manmohan Singh displayed in breaking from the past over 40 years is, I think, extraordinary and unprecedented.
During his tenure as Prime Minister for 10 years, Mr. Chidambaram, he often faced a lot of criticism from the opposition and some members of his own party about being a silent Prime Minister, a weak Prime Minister. He was none of that. But how did he take that criticism?
He didn't display any emotion at all. The old guard of the party, which was schooled in the time when Congress party adopted socialism as the goal, was naturally opposed to Dr. Manmohan Singh's reform measures. He patiently explained to them, and I think eventually they fell in line when they saw that the growth rate had picked up sharply, and the people were happy with more jobs, more growth, more availability of goods and services. The younger members learned very fast. And he was a patient teacher. He will sit with each minister and listen to him and explain what good economics is. And other younger members learned very fast. So I think he took the good and the bad in stride and was quite stoically, but he was convinced that the path that we had taken was a path to prosperity and greater growth.
Right. Any personal anecdotes you would like to share? You worked very closely with him in the cabinet.
A number, but obviously we can't share it in a short telephone interview. I remember he was very hurt when, in the face of fierce resistance by the left parties, some members of his party had tried to persuade him to give up the Indo-US nuclear deal. He called me and said, in such circumstances, if he was forced to scrap the Indo-US nuclear deal talks, he would have no option but to step down. I said, it won't come to such a pass. Let's persevere. There's a committee and we are working on the left parties. But I understand that if on a matter of principle, the party does not support the Prime Minister would have to step down. He was the only time I know that he contemplated resignation was when there was fierce resistance from outside and from some sections inside the party to the Indo-US nuclear deal. But otherwise, he was quite stoical.
Right. Of course, that's a very important point. But apart from the nuclear deal, were there any other challenges that Manmohan Singh faced during his tenure as Prime Minister?
He did face some challenges. For example, but they were not insuperable challenges. They are not challenges which could be overcome. We had to compromise. We had to compromise on the extension of Aadhaar. We had to compromise on the coverage of the Right to Food Act. But he was willing to make those small compromises as long as the basic core contents of his policy were intact.
Do you feel the party leadership was kind to Dr. Manmohan Singh, considering his great contribution to the economy and the nation?
Mrs. Sonia Gandhi stood by him like a rock. She named him as Prime Minister, and she was vindicated when in the second election, that is 2009, we got 61 more seats. Therefore, but then the errors were committed, not personal mistakes of Dr. Manmohan Singh, but the system did not exercise adequate control over the ministers and the ministries and their policies. And the system let him down in the second term, but he was quite stoical.
All right, the system let him down in the second term, but he was stoic about it. That was former Finance Minister P. Chidambaram speaking to us about Manmohan Singh's contribution, also telling us how Manmohan Singh actually wanted to resign when his party was asking him to give up the nuclear deal because of opposition from the left, and also saying how he had the courage to break away from the past and usher in reforms in 1991 and convince both the young and old within his party. Let's also listen in to more reactions that have been coming in.
I think Dr. Manmohan Singh had great regard for the Reserve Bank of India. You know, he'd understood that the Reserve Bank is a treasure trove of knowledge. If you wanted an opinion from an outside government source, you always sought the RBI's opinion, like I said, about the FDI in single brand retail. You sought our opinion about the land acquisition bill. You sought our opinion about the NREGA expansion. And you also, once he asked me sometime, about 6 months after I'd got into the Reserve Bank, why is everybody talking about the Reserve Bank policy? And I just kept quiet. Then he said, something very, as if he spoke to himself. He said, the RBI is a great institution. Everybody should not be talking about what the RBI ought to be doing.
He was an economist in a sense, because as you pointed out, in the initial reforms he carried out, you had to have faith in the theory, that the theory would work, that in the face of a currency crisis, you liberalized imports. Ordinarily one would think that that would suddenly boost imports and you would have more of a problem. But he saw that as part of a package which would set India on a new course. And I think, we've had 3 decades of robust growth since then. 6% by and large, something nations would kill for. And I think he laid the foundations for that, of course, along with Prime Minister Narasimha Rao. But the initial reforms when he was finance minister, I mean, that is huge, and it still plays out today. But I think we should also remember,
as India liberalized and opened up to the world, we all are actually beneficiaries of that creation, which Prime Minister Rao and Finance Minister Manmohan Singh then unleashed. And you're seeing the big benefits of that coming to us, 35 years later, as we said today. And his career to me actually bookends my own career in a way, that I started as a young student benefiting from him. And his other bookend is when he became Prime Minister and did the landmark nuclear deal with US and formed the rapprochement, which we finally had with the United States. And that unleashed the next layer of growth for India as well. I think those would be the kind of 2 seminal things we all would remember him for.
Welcome back to Trading Hour. Well, some selling pressure emerging as far as some of the metal names are concerned. A lot of the metal stocks names like Nalco, Hindalco, NMDC, all of them have cooled off from the day's highest point. Even names like Tata Steel, SAIL, seeing quite a bit of selling pressure emerge, especially in the last hour or so of trade. Hindalco now near the day's lowest point. But we are now moving on to a CNBC-TV18 exclusive. Sources tell us that the government is likely to be working out on bringing an index for insurance pricing. Yes, joins in with all the details.
Well, Vivek, this is a very interesting concept and, some development that we're picking up. What we've been given to understand from our sources is that the government at this point of time is working on bringing out an index which tracks the insurance premium pricing as far as, the segments that are concerned. This index could have representation coming in from life insurance premiums, general insurance premiums, as well as health insurance premiums. Further to it, what we've been given to understand is that the consultation process for, constituting an index of this nature is already underway, where the government is consulting various industry players in terms of how can an index like this be constructed. There's also a representation from the insurance regulator side, that is IRDAI. What essentially is the purpose? Right now, of course, CPI as well as WPI does not have a representation when it comes to the services sector, and through insurance index, that representation from the services sector going forward could be included when it comes to CPI as well as WPI. Of course, such an index like insurance pricing index already exists in many developed economies like US, UK, Canada, Europe, Latin America as well as Turkey. So very interesting thing which the government is working on with respect to, index pricing when it comes to insurance premiums.
Okay, all right, got that. Interesting development there. Yash, thank you for the details. Let's move on and get a couple of trading calls in. We have Sachitanand Otekar from Trade Bulls for some ideas. Sachitanand, thanks for joining in. Season's greetings to you. So the market finally has managed to find some green. I think finally this FPI selling, maybe the FPIs have finally taken their Christmas or New Year break. So you tell us, trades on the index, Bank Nifty, Nifty or individual stocks?
Good morning, Surbi, and season's greeting to you and all the viewers. Clearly, we have seen that the Nifty was consolidating well, but it was facing a lot of resistance near its 5-day exponential moving average, which has been breached today on the higher side. So probably it's a very good start for the series going forward. In case if we establish a close in today's session above that 23,850 mark, probably we may see a very good extended rally towards 24,200, 250. So I think the bias on the market remains positive. We have already seen a strong base which is formed at around 23,600. So we are expecting that this particular base may support the next leg of the rally. From a trading perspective, since the morning beginning, I think we have already seen a good dip in Nifty. The immediate support for the index is placed somewhere close to around 23,840. So probably that will be a good level wherein some long positions can be committed. From a trading perspective, one can keep a stop loss at 23,820 on a closing basis. And in a day or so, we may see the Nifty scaling towards 23,950. When we look at stocks, there are a couple of stocks which are showing tremendous strength, especially from the pharma space. What we have observed is that there's a fresh breakout when it comes to Sun Pharma. Throughout the December series, the stock consolidated well within the 1830-1800 band, and now we have already seen a good strong breakout supported with a gap. We are expecting that this particular rally may continue towards 1920, and that's why we are recommending building fresh long positions here in Sun Pharma futures with a stop loss at 1810. The other stock which has hit our radar on the positive side is Tata Motors. Now, if you look at the overall construct, it has been in a very severe downtrend for the last 4 months. But lately, we have seen that there has been a good, strong positive divergence on its weekly RSI. The price action is also supporting this, and there's a good, convergence on the lower side. So probably we may see a good, turnaround in this particular counter. From a position perspective, we are expecting that during this particular series itself, Tata Motors can scale towards 860. From a trading perspective, the target is placed at around 810, and we are recommending building long positions here, keeping a stop loss at 710 on a weekly closing basis.
Thank you so much for that, Sachinandan, both for giving your views on the Nifty, the Bank Nifty, as well as your individual stock calls. Well, some important flashes on your screen. The rupee has weakened further. The dollar versus the rupee now further weakened at over 85.5. Now, this is again quite concerning given the fact that this is a fresh record low as far as the rupee is concerned. But we'll now take a short break. Up next, we'll discuss market fundamentals with George Thomas from Quantum ASC.
Welcome back. You're with us on Trading Hour. Let's get some market perspective with George Thomas, who's from Quantum AMC. George, thank you very much for joining in. Season's greetings to you. Hope you had a great Christmas break and are all set to wind down the year. So, just tell us top down, what is the overall portfolio thesis with which you're entering 2025? Because there are a lot of moving parts. The market's been consolidating. There are concerns about urban consumption, and it remains to be seen whether capex can still be a market-leading sector next year. Your views?
Thanks, Surabhi. Season greeting to you and all the viewers at CNBC. Clearly getting into 2025. So 2024, we have seen some bit of earnings moderation. One, after COVID, there has been a margin expansion, primarily driven by a lot of raw material input cost moderation, and that kind of created a very high base for a few quarters in the last year from an earnings growth perspective. So going into next year, that would moderate to some extent. And the second major slowdown which happened was on the capex front. Government capex, which was taking the lead, had taken a backseat with elections and all those approval machinery kind of slowing down. So even that could kind of reverse in the current year. But of course, we would be watchful of on the quality of revenue expenditure which are done by different governments. And that remains a key watch point. But our sense is that government capex should come back this year, and that should give some fill up to the economic growth to some extent. But as far as otherwise, from a broader perspective, there are no clear headwinds other than that. But obviously, some of the sectors like industrials, which would be major beneficiaries of capex revival, those have already priced in a fairly strong earnings growth. So we may not be able to play those themes to a large extent. And another thing which has happened over the last year is the small and mid-cap segment, which was already expensive, again has rallied on a relative basis on a phenomenally good manner to close to 30%. So that has kind of resulted in a more overvaluation in those pockets. So our sense is large caps could lead in 2024, and within large caps, the obvious value bet remains private sector banks. So apart from that, some pockets of opportunities are emerging in insurance space or some regional cement players where we see the upside could be fairly decent.
Understood that, George. So you spoke about private banks, you spoke about regional cement players. Now, talking about H2, what is the kind of earnings recovery that you're penciling in? And FY26, given the slightly subdued base, we will be entering, on the back of a low earnings in FY25. What is it that you're penciling in? And apart from private banks and cement, what is it that you like?
See, the second half would be a gradual earnings recovery because some of those headwinds which has hit the economy in terms of urban consumption or government capex, the revival would be slightly slower. So we don't expect a sharp uptick in any of those metrics. So second half would be a slow recovery. But FY25 earnings growth, we don't feel it would be anything different than what we have seen in the longer term history. So the kind of earnings growth which we see, which is in line with nominal GDP growth of 12-13%, we don't feel FY26 would be any different. We don't feel there would be a marginal deceleration to that extent.
Okay. So, George, top investment ideas, 2025, what would you go with?
See, 2025, clearly banks was one sector which was left out on a relative pecking order if you were to look at the sectoral returns. The other sector which had a fairly muted return was FMCG. But our sense is there has been a lot of valuation excesses built in that sector over the years. Because for a large part of the last decade, those were the only names where there was some earnings growth when the whole of the market lacked material earnings growth. And that has built in some bit of overvaluation there. But our sense is over the course of the year, there could be a case that some of even the FMCG names could get to those fair values on, and investors could hope for building in positions there. But banks is one clear sector where there is reasonably good value, and it has not performed well in the last couple of years. So as the credit cycle normalizes, as those credit costs normalizes, we would clearly see some of those private sector banks which has fairly strong franchises along with good underwriting practices to lead the market.
Right. Thank you so much for joining us, George. Wish you and your team a very happy new year. Well, time now for a short break. We'll get you more on the markets on the other side.
Welcome back. Let's take stock of things. It's a 100-point move on the Nifty. It's a little off the highs, but it's still not too bad. The mid-cap index is the one that continues to be in slight negative territory. Some important movers, I mean, we're talking about the cool-off in the market from the top. Look at Bajaj Auto, Eicher, Maruti. A lot of these auto names, it's the second running day where, they've seen gains. Now there's a bit of profit-taking that's witnessed on some of these stocks as well. Likewise, some of the financials. IndusInd Bank, by the way, Vivek, we remember, right? IndusInd Bank was benefiting from the news that they're putting a large chunk of their MFI loans, stressed MFI loans on the block. And that was helping the stock, but a little off the highs for now. Okay, well, with that, I think we're out of time on this edition of Trading Hours. So thank you very much for tuning in. Do stay tuned. All the market action will continue. Up next is a halftime report.